I am Tsutomu Yoshizawa, Senior Manager of the IR and CSR Development Department at Prestige International. I have taken on the responsibility for IR from August of this year, as well as heading up our efforts to revitalize regional communities. I am focused on engaging deeply with local communities as well as shareholders, investors, and analysts, and look forward to working with you all. I would now like to get started with the presentation using the slide deck. Our presentation today will cover 5 topics. I will cover the first section on the results for Q2 fiscal 2022. CEO Tamagami will then present the full-year forecast and outlook and highlight key initiatives we are implementing. I will start with an overview of the Q2 fiscal 2022 earnings and forecasts. You will have already seen our financial disclosures, but as of the end of Q2, we have chosen to revise up our full-year forecasts. If we look at overall Q2 performance, we were able to generate double-digit year-on-year growth. Compared to the very challenging environment last fiscal year as a result of the pandemic and a number of states of emergency, we have seen a resumption of economic activity. Automotive, which is our mainstay business, reported an increase in the number of dispatches, reflecting the start of a virtuous cycle. That said, COVID-19 did impact the automotive business. We will go into more detail on this later. While the situation remains unpredictable, we believe conditions here have clearly improved. With regard to the property business as well, dispatches are increasing. In these businesses, our clients provide us with an annual budget within which we operate our services. If the increase in dispatches runs ahead of our expectations, it can depress profitability. Because of this, there are differences in performance between the individual categories. I will cover this in more detail later. However, overall for operating profit and the other levels of profit as of Q2, we were able to report significant year-on-year growth as a result of a major contribution from the customer business. We were therefore able to raise our overall full-year forecast for operating profit by 350 million yen. I would now like to move on to a summary of the consolidated P&L statement. As noted earlier, we have seen dispatches in the automotive business increase, leading a recovery. Reflecting this, dispatch-related expenses rose. As well, the expansion of the Yamagata BPO park this year has pushed up depreciation costs. Both contributed to a higher cost of sales year-on-year. In SG&A, there was a temporary increase in provisioning for doubtful accounts in the financial guarantee business. Also, related to the dispatches discussed earlier, we have been expanding our dispatch-based network, adding to headcount and training new staff. These efforts to improve our service levels led to an increase in spending, including expenses related to the opening of new dispatch bases. This pushed up overall SG&A expenses slightly. With regard to customer assistance services, we believe the human touch is a key contributor to enhancing service levels. Our top priority is to ensure our service staff are able to interact well with customers and provide high levels of service in order to achieve strong customer satisfaction ratings. We remain committed to providing solid training for our service staff before they engage with customers to ensure we do not sacrifice quality for quantity. We consider this to be an advanced investment that will allow us to grow strongly once the COVID-19 situation stabilizes. We are undertaking advanced investments, but we believe opportunities to recoup these investments will emerge in the current fiscal year. The figures are as stated here. Please review these at your leisure. Next, turning to assets, liabilities, and net assets. Starting with assets, as a result of the pandemic, last fiscal year we reported a decline in current assets. This fiscal year, we have seen solid progress on a recovery in assets. As shown here, our financial soundness has improved. On top of the increase in current assets, fixed assets also increased on the expansion at Yamagata BPO Park as discussed earlier, as well as the opening of other new sites. It has been our practice to add a BPO every 2 years. This fiscal year in February 2022, we will be opening a new site at Nikaho, Akita, expanding the existing capacity to 500 seats. We have continued to invest proactively, but our situation in terms of current and fixed assets remains highly sound. We have been able to rebound from the tough environment of last year and firmly believe we have been able to establish a foundation which will put us on track for further growth. When we look back at the first half of the current fiscal year, we believe we have been able to position ourselves well. Please review this slide for further details on the balance sheet. Next is cash flow. It has been our practice to make advance investments in anticipation of business growth. As noted earlier, we have added a new BPO site every 2 years with a 4-year planning timeline for each development. Rather than building capacity only after demand has emerged, our strategy has been to build capacity in line with our forecasts of demand. This has underpinned the continued expansion of our BPO sites. This is reflected in the chart we show here if you track the progression of investment cash flow from second quarter fiscal 2019 through Q2 fiscal 2020, Q2 fiscal 2021, and Q2 fiscal 2022. The investments we make are solidly backed by higher operating cash flow driven by increases in profit generation. We allocate profits towards the next round of investments. As of the end of Q2, free cash flow increased. On a full-year basis, we are committed to generating profits to ensure we also reward shareholders as well. I will now comment on the breakout of sales by segment. At the outset, I commented briefly on the overall picture, but as you can clearly see here, we reported particularly strong sales growth in the customer segment. The other businesses also reported year-on-year sales growth. We have seen a good recovery from the tough revenue environment of last year. This reflects the impact of the easing of restrictions on movement, changes in popular sentiment, and a pickup in economic conditions. As alluded to earlier, the automotive business has reported an increase in dispatches. We have also seen a shift to positive growth in dispatches for the property business as well. For the global business, which has been very challenging, the number of outbound travelers remains low, but as the economy rebounds, we have seen an increase in expats returning to their postings, driving a recovery in expat numbers for the U.S. On the back of the return of expats to postings, credit card usage has picked up. As a result, the global business has improved in comparison to the dire conditions of last fiscal year. We are starting to see the light at the end of the tunnel. Almost all the segments reported positive year-on-year growth in sales in first half. In contrast, as noted earlier, operating profits for the automotive and property businesses both fell year-on-year. As discussed previously, profits in these segments were depressed by the impact of increased depreciation costs owing to the expanded capacity at Yamagata BPO Park, advanced investments in new service bases for on-site dispatching service, and human resource training. However, we consider these to be investments that will contribute to future growth. As such, we believe we will be able to make up for the profit declines with growth in second half of this fiscal year. With regard to global, however, as mentioned earlier, we were able to generate positive growth in both revenues and operating profits. Last year, when conditions were very tough, we seriously considered how to best approach this business. We are pleased we have been able to return to growth without having to close any of our overseas offices. That said, the situation is still very unpredictable. We will discuss this business in more detail later, but credit card usage has increased 30% in the U.S. This was a major contributor to the improvement in the global business. The standout in growth, however, is the customer business. This business focuses on responding to customer inquiries or providing support for a broad array of corporate clients. During the pandemic, we were successfully able to win orders from highly recognized brands. There was an increase in new clients. We also focused on improving unprofitable projects through the dedicated efforts of our sales and field staff, which also contributed to the profit growth. However, the biggest impact was the result of a number of collaborations with municipal governments during the pandemic, such as the dramatic growth in support projects related to vaccination programs and other municipal government initiatives. In addition, the duration of these projects has exceeded our initial expectations in terms of when the pandemic would come under control. Going forward, given demand related to vaccine booster shots, we expect this business to remain firm. Overall, the customer business was a major driver of operating profit growth. As a result, it was also a major factor supporting the upward revision to our full-year forecasts. I have generally commented on the individual segments in the discussion of the bar chart on the previous page, but would like to go into a little more detail here. With regard to the automotive business, the driver of sales growth was, as mentioned earlier, the gradual recovery in economic activity and the acquisition of new clients. In addition, there was a positive sales contribution from hybrid services combining our mainstay roadside assistance with recently added accident reception services. With regard to operating profit, as noted earlier, there was an increase in dispatching costs, reflecting the rise in the number of dispatches. This has implications for profitability given that structurally, our fee for the fiscal year is fixed in advance, so costs tend to lead on the back of growth as dispatch numbers rise. As discussed earlier, we are focused on raising our service levels by increasing the number of field bases and increasing headcount for service staff. As the restrictions on activity have been lifted, we believe we are well positioned to capture growth opportunities. That said, we also recognize the difficulty in predicting how the pandemic will progress, including the risk of a further resurgence of infections. Given the lifting of restrictions and the increase in the movement of people, we view the higher costs as advance investments. We expect the new field bases and service staff will contribute to profits in the second half of the current fiscal year. Next is the property business. The existing Home Assist business showed steady growth with sales up 16% year-on-year. Dispatch numbers also increased by 19% year-on-year. This growth reflects the impact of more people staying home, driving a boom in refurbishing work. This is also contributing to solid growth in Home Assist projects. The Park Assist business reported strong sales growth on the acquisition of new business and in the existing business on a contribution from smart parking. However, owing to the challenging operating environment, our clients, the operators of car parks, were restructuring, closing down low-margin car parks in suburban locations. As a result, overall sales from the existing consignment business declined. With regard to operating profit, similar to the automotive business, we are investing in training for service staff and adding new field bases, so profits fell year-on-year. We expect that these advance investments will contribute to profit growth on the back of a new large-scale project in the next fiscal year and believe that we will be able to enjoy a recovery in profitability going forward. I have already talked about the global business, so we'll skip this segment on this page. Next, I will talk about the business that is of the most interest, the customer segment, as it relates to vaccine-related services in partnership with municipal governments. Our large-scale BPOs are located mainly in the Tohoku and Hokuriku regions. This has allowed us to develop very strong relationships with municipal governments in these regions, where we already had the framework for collaborations in place. There was a need to rapidly ramp up vaccination and other COVID-19 related services, and an urgent need to provide services to support municipal governments in their efforts to respond to the crisis. The strong sales and profits we were able to generate reflect the high regard that municipal governments have for our ability to respond swiftly. Our BPOs are firmly embedded in local communities. Our strong ties to local communities means we receive many inquiries from the local population. From these inquiries, our skilled operators are able to appropriately identify local issues and respond quickly. We believe this strength is why we are rated highly and have continued to be successful in these regions. We aim to build on this business and to use it as an opportunity to further expand our business with municipal governments. We believe that we have laid the foundations for further collaborations, so we do not view the business with municipal governments as one-offs, but rather as a stepping stone to further growth. The financial guarantee business, which is operated by group subsidiary Entrust Inc., continues to show steady growth. This segment reported higher sales and profits year on year. With regard to other businesses, please review this slide. In closing, following the end of Q2, as noted previously, we have revised up our full-year forecasts. Our strong first-half results have meant that we were also able to execute on investments which will drive growth in the second half and beyond as well. This completes my review of the first-half results. I will now hand over to CEO Tamagami to present our forecasts and key highlights. Thank you. I am CEO Tamagami of Prestige International. Thank you for finding the time in your busy schedules to join our earnings briefing. I will start by talking about our forecasts for the fiscal year ending March 2022. With regard to the first half, as presented by Mr. Yoshizawa, we were able to generate strong growth in sales in all our segments on the back of a gradual recovery toward normal levels of social activity and a pickup in economic activity. From this perspective, we were able to revise up our full-year forecasts, reflecting the outperformance in the first half. The revised forecasts do not include an upward revision to our second-half forecasts. Obviously, there is no guarantee that we will be able to achieve growth in sales and profits. As well, we cannot say that the probability of a second-half sales decline is zero. This is why we have chosen to leave our second-half forecast unchanged, revising up only to reflect the first-half overshoot. That said, we were able to achieve substantial year-on-year growth for sales and profits in first half. We will focus our efforts on maintaining this trend in the second half. On the next slide, we show the progress rates relative to our revised full-year forecasts. By nature, there are instances where we are laying the foundations in first half for projects that will start in second half. In particular, there is a very strong seasonal concentration of activity at the end of the fiscal year in the rent guarantee business. As a result, sales and profits in this business tend to skew very heavily to Q4. On this basis, there is a tendency for second-half earnings to be stronger than first half. Against this backdrop, we have seen particularly strong growth in the customer business. As discussed when we announced Q1 results, we have several large-scale sites located in the Tohoku and Hokuriku regions. We also have very deep relationships with the municipal governments. When we develop these sites, it effectively means that we have been welcomed to the community as an expected creator of new jobs. We have win-win relationships with municipal governments in the regions where we operate our BPOs. This time, we were able to respond to the COVID-19 related needs of municipal governments with customer services and vaccination reservation services. In many regions, the proportion of elderly residents is relatively higher. We were able to win many opportunities where we provided services that cater to the needs of seniors on behalf of the municipal governments. In the second half, we expect to see a continuation of these services on the back of progress on plans for the third round of vaccination booster shots. Supported by economic recovery in the second half, we also anticipate the emergence of opportunities to initiate other support service programs. We will continue to focus on further enhancing our relationships with municipal governments as we aim to win new opportunities. Running through the businesses, the continued recovery in the automotive business will lead to an increase in costs. The level of revenue is fixed under annual contracts with our clients, so we would not expect to see significant top-line upside, but we could see costs and expenses increase. However, even if profits were to decline temporarily as a result of the higher costs, the growth in the scale of the business will be a major factor in negotiating the contract terms for the next fiscal year. Given this, we believe such an increase in cost should be viewed as a positive. In the property business, we have won a new contract with a major energy provider which will start next year in Q4. Since the beginning of this fiscal year, we have been preparing for this new business by investing to expand call center and field service capacity. The investments will also contribute to expanding our network in the Kanto region. we continue to build out our capacity. Based on such investments, we expect to see strong growth from Q4 into the next fiscal year. For the global business, first half conditions remain challenging. In second half, the COVID-19 situation remains unpredictable, particularly in Southeast Asia. For the US and Europe, governments have shifted towards a strategy of living with the virus to a certain extent. This has led to a solid increase in the number of countries now reopening to travelers from other countries. Given these conditions, we are being careful not to be overly optimistic. We will continue to be cautious in responding. That said, compared to last year when the overseas activity of Japanese corporates had virtually ground to a halt because of the pandemic, activity levels have recovered significantly. We expect this trend to continue into the next fiscal year. If the question is, will we be able to return to fiscal 2019 levels from April 2022, there are no guarantees that this will be the case. However, when activity returns to pre-COVID-19 levels in the near future, we want to be ready to ensure that we will have sufficient capacity to meet the needs of our clients. We will continue to focus on expanding our sales and field office network. I would now like to talk about our expanded BPO in Yamagata. Operations have begun in earnest from April of this year. We have already been able to acquire new clients and are also providing services to municipal governments. With regard to health and productivity management, we are firmly committed to implementing measures. We recognize that our employees may be experiencing elevated levels of physical and psychological stress during the pandemic. We aim to ensure our employees can maintain a sense of well-being while continuing to work. As a company, we have developed a significant workforce in the Sea of Japan coastal area of the Tohoku region and the Hokuriku region. Reflecting our strong ties to the municipal governments, we have proactively focused on creating jobs in these regions, primarily for women. We are highly rated for our activity in this field. The main objective of municipal governments is to develop and maintain vibrant and active communities. Working with municipal governments, we have focused on contributing to revitalizing communities through sports and our sponsorship of sports teams. From this fiscal year, our women's basketball team based in Akita is participating in Japan's top women's league, the W League. This is the first time in 17 years that we have a slot in the top league. This year, partly because Japan won the silver medal in women's Olympic basketball, the team has been able to achieve full attendance for their home games, although attendance permitted under COVID-19 restrictions is capped at 50% of total capacity. Nonetheless, we take great pride in the fact that our contribution to revitalizing local communities is very highly regarded. This shows the operational status and capacity utilization of our BPO sites. Akita is at virtually full capacity. For Yamagata, we added 500 seats in April. Already 809 seats are in use. There is capacity of roughly 250 seats remaining at Yamagata. At Toyama, roughly 800 seats of the 1,100 seat capacity is in use. Of the 1,080 seat capacity, 776 seats are being utilized, with available capacity of around 300 seats remaining. Yokote was opened 3 years ago, but is already at utilization of around 360. From next April, we are expecting this to rise to around 400. For Nikaho, the new BPO site will be completed at the end of March. We are currently operating from 3 offices in Nikaho with 257 seats occupied. Therefore, when the new center opens and total capacity goes to 500 next April, roughly half will already be in use. Finally, for Uonuma, our facility was not built by Prestige International. Instead, as a result of the merger of a number of towns and villages, we have been able to use vacant space previously used by the municipal government. There is still plenty of room to expand. We consider Uonuma to be a special case in that it is difficult to provide a differentiated workplace that reflects our approach since we are using former government offices. We do recognize that this poses some special challenges. That said, very simply, this is a site that did not require significant investments by us, so our focus at Uonuma will be on steady growth. If we look at current supply-demand, we still have a shortfall of about 150 seats relative to the demand as of the end of the current fiscal year from clients of the group as a whole. From this perspective, expansion of sites is strategically very important. In particular, in the regions, it can be virtually impossible to increase headcount significantly at a single location in one fell swoop. Therefore, it is necessary to continue to expand the number of sites, making it possible to increase staff across multiple sites rather than focusing on a single site. For example, if we have 5 sites, we can hire 100 people in total, which helps address the shortfall in capacity. This is our site deployment strategy. Our plan is to add 500 seats capacity in Ichinoseki, Iwate Prefecture, in the fiscal year ending March 2024. Before the end of the current fiscal year, we will also make a decision on plans for further capacity, either in the form of a new location or expansion at an existing site. We are currently considering Akita, Toyama, or Yokote as possible sites for either new capacity or expansion. We aim to make a decision during the current fiscal year. Our core strategy continues to be to add new capacity of 500 seats in a single location once every 2 years in order to respond to demand. We believe that we can hire talented individuals if we provide attractive workplaces. By attracting superior human resources and properly committing to support their career development, we can retain skilled staff over the long term. High levels of long-term retention contributes to improving our relationships with our clients, giving them a sense of security in using our services. I believe this is what drives the growth of our business. Our aim is to develop such virtuous cycles in conjunction with the expansion of our regional sites. Our field support staff is one of the most important differentiating factors for our businesses. It is a key element for our automotive, residential, and car park services. Overall, we currently have 500 to 600 field staff. Under our current medium-term plan, we aim to raise this to close to 1,000. We are seeing solid increases in activity levels. However, it is essential to invest in training for field staff, new field bases, and service vehicles. While field support requires significant investments, it is also a key differentiating factor. If we look at the real estate management or automotive industries in Japan, there are effectively no other players that can match the scale of our network. So we view this as a key differentiator where we are able to create unique value. From this perspective, we plan to continue investing in our field support capabilities. Briefly, there are still significant areas that we have not been able to cover either through the resources of our group companies or through our franchisees. We will remain disciplined in focusing on improving efficiency and locking in profitability while we continue to invest to expand. Finally, with regard to dividends, we had already raised our dividend per share guidance for the full year from last fiscal year's 7 yen to 8 yen for this fiscal year. As of first half, profits were up around 10% year-on-year. This has not been reflected in either our interim or fiscal year-end dividend guidance. I, the company and the group as a whole, will focus on our second half performance to improve our dividend. We remain committed firmly to executing on our plans. We humbly ask for your continued support. Thank you.